Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to be talking about Bitcoin. We're going to be looking at the move that it's currently in. So if you guys like the content, please subscribe to the channel. We try to keep a very level-headed approach here, a systematic approach based on data science models rather than emotions. So if you guys like this content and you like this this approach, then please subscribe to the channel, turn your notifications on, and check out the Telegram channel in the description below. We have almost 3,200 people there, so if you want to come join the discussion, there's certainly a lot of people chatting today. Now, let's go ahead and jump in. So, one of the things I want to remind people, if you're new to the channel, I just want to first take the opportunity to say, don't listen to what, people are screaming out on Twitter or wherever it may be constantly about what direction the price of Bitcoin is going. There's so many people saying, okay, 9,500 is the top, or they said that like 8K was the top, and that we're going back down to 3,100, or some people say we're going back down to 1,800. Remember, these people exist in every cycle. In every single cycle, these people exist that will say, they're like the doomsdayers. They'll just say, okay, well, Bitcoin's going back down, and it's going to continue going down. It's either going to go to zero or it's going to retrace back to a level that I'm okay at purchasing at, but not until then. So this is ultimately, will help fuel a bull market, because eventually people realize that, their irrational price targets are just not. They're just irrational. There's no reason necessarily to think that we have to go back down to that level. There's even people that are saying today, they're saying, okay, I'm going to buy Bitcoin at $3,500, and while there is a probability that you could have that opportunity in the future, what if you don't? And also, why would you say that? Why didn't you just do it when we were there around $3,800 in March? You literally could have bought in this region just a couple months ago, and people again are screaming out that we have to go down to this level. So I'm not saying it's impossible for us to go back down to that level. Certainly going back down to, say, the 200 week at $5,700 is not completely off the table. We know this is a possibility. But why, what's the point of risking it in terms of an all or nothing approach? And this is the video I talked about yesterday was dynamically dollar cost averaging. I personally use the risk metric to do this. So basically it allows you to identify, historically speaking, it takes into account the data from the last 10 years, looks into how things are behaving over the macro scale, accounts for lengthening cycles and diminishing returns. And based on what your risk tolerance is, it will tell you, at what range you might want to consider either buying Bitcoin or taking profits. And I've set it up so that, whether you're a conservative risk taker or a moderate risk taker or an aggressive risk taker, you can use this metric in a way that will help you sleep at night, and you don't have to worry about what Bitcoin does. Again, it's not necessarily about what Bitcoin does, it's about how you react to it. If Bitcoin goes to $100,000 and then retraces back down to $30,000, then who cares if you didn't take advantage of that move? So by going in now and having a plan, you can take advantage of it. So this is the primary thing I want to say about this. We've talked extensively on this channel about this 20-week moving average. So if we scroll back, you can see that during the last bull market, the 20-week moving average was our support line. And I've said, several times that once we get above the 20-week, we expect a significant move. And even just a few days ago, there was a daily candle that was red, and everyone was saying, okay, Bitcoin's going back down to $5,000. And I just had to remind you, you have to look at longer candles. Look at, say, weekly candles. There's a clear and obvious trend going on. Obviously, we will retrace at some point. At some point, we will need to come back down to the 20-week moving average and confirm support. Now, the thing is this might not happen for months. You can see over here, back in April of 2019, it took until September before we retested the 20-week moving average. The 20-week moving average could be at, say, $13,000 by the time we retest it. It's hard to say where it's going to be. In the last cycle, you can see that once we got above the 20-week moving average, it took, if we just say take a measured move here, so that we can, actually I'm going to take a date and price range, so going above it to then testing it, we went up 47% over 112 days. So this could take a while to retest. And one of the things I do want to tell people is that a lot of people think that, you know, Bitcoin has to go down just because the last halving it did. Well, I mean, the first halving it did. And the idea that you can take, just say like one data point and say, well, it went down last time, so it has to come down this time, is completely ludicrous. You know, it may come down, it may not. And it ultimately depends on is your reaction to whatever happens. So this is the key thing. So, you know, we moved above the 20-week. I've told people, if you watch the channel plenty of times, if we break $7,800, then things are going to probably move quickly in the short term. And they have. You know, since we broke that, in just a couple weeks, we've moved up from $7,800 to almost $10,000. You can see at the time that I'm recording this, the price of Bitcoin is $9,850. So this is a significant move. And you begin to understand how important the 20-week moving average is. Because whenever we break above it, it tends to be really good news in the short term. Now, again, we're going to want to confirm it as support. If we break below it, this is when I would especially recommend, if you have a lot of altcoins, converting back into Bitcoin or stable coins when we go below the 20-week moving average, and then potentially diversifying when you get above it. I know there's a lot of people that watch the channel that also have exposure into Ethereum, and so far it is 6 out of 6, this idea. If you convert Ethereum to Bitcoin when Bitcoin goes below the 20-week moving average, then when you reconvert when Bitcoin goes back above, you've accumulated more Ethereum. And the idea has also held true, converting, say, some to Ethereum when Bitcoin goes back above the 20-week, and then converting back when it goes below. So it usually works out. So it's 6 out of 6 when Bitcoin goes below, and it's been right all but one time when Bitcoin goes above. And the time that it didn't work out was during the bear market that we saw a year or two ago. So just know that there's no free lunch. It's all about taking risks. What is your risk tolerance? We may see a move with Ethereum. In the short term, it might take a while. And if you remember, in 2015, when Bitcoin got above the 20-week moving average, so back over here, if we just scroll all the way back, so Bitcoin got above the 20-week moving average in October of 2015, but the move where Ethereum, I think it went up around, say, 1,700% or so, that move did not come until the first quarter of 2016, which is when Bitcoin was holding the 20-week moving average as support. So this is a key, this is something to just remember. It doesn't have to be an instantaneous thing. There's, going all in on something is ridiculous. You dollar cost average your way in and out of markets. I tend to do it dynamically based on the risk metric that I made. But you don't have to use that. You can use some other metric. You can make up your own metric based on, say, price volatility. If you do want to use the metric I use, you can either sign up at patreon.com/intothecryptoverse, just $50 a month. It will get you a weekly newsletter with risk analysis, valuation insights, logarithmic regression, a private Telegram chat room, and access to Google Sheets where you can see the risk levels for Bitcoin and Ethereum. You can even export that to your own dashboard if you want to trade using it. And also I do have my own website now, so if you want to sign up there, you can too, and you can even pay with crypto. But you have to pay for either 6 or 12 months with crypto, just because it's not a recurring thing. But you do get a discount. I think if you pay with 12 months or pay for 12 months, you get like 10 to 12% off or something. But anyways, the point we want to reiterate here is that nothing is a game of days. When you see things occurring on a daily time frame, your emotions tend to react to it in a way that is completely irrational. Because just a few days ago, I published a video when we were seeing one of these candles down on the daily time frame. I think maybe it was this one, maybe it was May 3rd or May 2nd, or May 3rd or May 4th, I think. And people were saying, all right, Bitcoin's going back down. And that's not the point. The point is don't look at daily candles, look at weekly candles. Even maybe look at monthly candles if you want. I mean, if you look at monthly candles, it's a very interesting story here. If you just say look at monthly candles, and what do you know? I've never even looked at this, not recently anyways, but you can even look at the 20-month going below it and basically holding that as some level of support. But It's hard to work with months, typically, just because these time frames are very, very long, and people do want to start dollar cost averaging when key milestones are occurring. And remember, when Bitcoin went to 20K, if you were basing everything off monthly candles, you could have missed out on a lot there. So the key things to remember here are the 20-week moving average, again, so that you feel it as we go through this market cycle. This is the catalyst for the bull market. You see how price behaves differently when we're above it than when we're below it. When we're below it, people are, the mood is completely different. When we get above it, things change quickly. There's a ton of people on Twitter saying, shorting Bitcoin and all this other stuff. Well, I imagine most of their positions have been liquidated at this point, because they were shorting it around $9,300, saying that $9,500 was the absolute max that Bitcoin would go in the short term. And I can assure you that neither me nor anyone out there can definitively tell you 100% of the time where Bitcoin is going in the short term. It's just how you react to it. So, with all that said, remember, we published a video yesterday on the risk metric for Bitcoin, and I said in the video that the risk at $9,300 or $9,200 was around 0.39. If you want to follow that and come up with your own strategy, then again, check out the premium content. You can find links to it in the description below, or set up your own strategy. Just set up some strategy that you're looking at numbers rather than just playing with your emotions and making an irrational guess that's likely just going to lose you money. So again, we're going to continue to follow Bitcoin throughout this market cycle. I'll be here every step of the way. But I just want people to try to, think critically, think a little bit more critically about the price of Bitcoin and look at the macro level picture again. Don't look at daily price moves, and focus on just dynamically dollar cost averaging in and then dynamically dollar cost averaging out. This is how you ensure you take profits. This is how you can ensure that you're setting yourself up better financially, assuming the markets do well. Because if the markets do well and you don't have a plan, then you might just end up losing money or something. So I think this video was not planned. I was not planning on making this video, but just considering the price movement here, I just want people to maintain a level head. And it's important to maintain a level head, not only when price is going down, but also when price is going up. No, it's a game of numbers. It's a game of patience, and I think ultimately we're just getting started on our journey. Our multi-year journey that's going to take Bitcoin to around six figures. So, what you see today is still somewhat irrelevant to the comparison over what should happen over the next, say, 3 years or so. So, I hope this video was informative, a little pep talk. I know I'm not really saying anything that's too concrete, but if you're just dying for an outlet and you want to go talk to some people, there's at least the Telegram group in the description below if you want to come talk. A lot of people there talking right now. So I'll go ahead and wrap it up, guys. I hope you guys enjoyed it, and I'm sure I'll be publishing some more videos in the coming days looking at Bitcoin in more detail, using some of the other analysis tools that I've developed, as well as looking at other coins like Ethereum and the lagging. At least Ethereum right now is lagging, but history has told us that it can take a few weeks before things pick up there. So stay disciplined, don't get too focused on the short term, and I'll see you next time. Bye.